Okay, hey, Ryan here with James D. Piazza, Bond Street Mortgage. Hi, James.
Hey, Ryan.
Today we're going to go through 7 things that you might not know about the VA home loan program. But before we start, James, you mentioned that your company, Bond Street, does a few interesting things. First off, every veteran that gets a VA home loan with Bond Street gets a credit toward closing costs.
Yeah, absolutely. Thank all veterans for their service. They receive a lender credit towards closing costs from our company when they come to us for a VA home loan.
Great. And then a donation of $250 is made to backpacksforlife.org. You want to talk a little bit about that?
Yeah, Backpacks for Life is a local a non-for-profit. It's veteran founded and veteran operated. Some really great people there. I encourage everyone to go to the website, and actually we'll be doing a future series with them to discuss more about VA home loans, a little bit more about the organization and the services that they provide. So stay tuned for that as well. But very near and dear to my heart, I'm the board of trustees there, and so with every VA home loan that Bond Street writes this year, we'll be donating $250 to Backpacks for Life.
Great. All right, well, let's jump on in now to the nitty gritty here, the 7 things you might not know about the VA home loan program. The first slide we have is the certificate of eligibility. Do you want to talk a little bit about that, what that is?
Sure. The certificate of eligibility is basically shows what your entitlement is, and as far as your exemption as related to the funding fee that's part of the VA home loan, will help the veteran retrieve that. If they don't have it, we can go ahead and retrieve that record from the VA database with a copy of the DD 214 from the vet.
Okay, and it's best, would you say it's best for the veteran to do it themselves, or would you rather do it? And we have a note here about the mortgage, the processing department clicking the wrong buttons in the slide.
Yeah, that comes into effect when we're talking about second tier entitlement or getting the second VA loan, and especially keeping both VA loans active, which we'll get into in a minute. But the initial certificate of eligibility, if the veteran doesn't own a home and they're buying their first home, they can absolutely go and get that information. We're more than happy to do it for them as well.
Great, and we just touched upon kind of another thing that a lot of people don't know is that you can have 2 VA home loans at the same time on that second tier, I guess.
Yeah, absolutely. So the way that the VA allows for the second tier entitlement, because many times, obviously, as a veteran, you're stationed one place and then having to, get up and go and move to another place. So you can use the additional entitlement that you would have to purchase a second home using the VA loan program. And there's basically a calculation that is done, what your entitlement is now minus the benefit that you used on the current home. What the difference is there is what you can use as the entitlement to purchase your next home using the VA home loan.
Gotcha. So what comes into play here, I've heard of some veterans doing this where they end up with an investment property. It's not like you can use the VA loan program to buy an investment property up front, but you might end up with one if you hold on to an older one. Is that the correct way to put it?
Yeah, I mean, look, again, if you have to get up and move, obviously the intent of the VA loan is not to be used as an investment type loan, but this is exactly the situation it's for. And if you have to go ahead and rent out that property while you're waiting to sell it, or end up holding it longer term, that's absolutely okay. You can keep the VA loan on that property and have it rented out.
Great. And we have our slides here, the second tier entitlements. You just touched on that. It says it might allow you to use more VA loan benefits. You mean just for another home, or is there more stuff involved around those second tier entitlements?
No, it's just for another home. And just to give an example of that, based on whatever your entitlement amount is, and in normal non-high cost areas, it's about $113,000 and change that you get as an entitlement, and you multiply that. That represents 25%, because 25% of the VA loan and change that you get as an entitlement, and you multiply that. That represents 25%, because 25% of the VA loan is actually guaranteed by the VA. So when multiplying that by a 4% factor, you would, in a non-high cost area, you would qualify for a loan of 453,100, which that was last year. They just raised those VA loan limits. That I believe now is about 484,000. Therefore, if you don't use that whole entitlement, let's say you buy a house for 200,000, right? So that's 50,000 because dividing that by 4, you used 50,000 of that entitlement. Now you subtract that from the 113,275, which is the max entitlement in a non-high cost area, and that difference of 63,000 and change times 4, which puts us a little bit over 250,000. You can go ahead and now purchase a VA home loan, a home using the VA loan, entitlement for that amount.
Got it. Great.
And that's where the trick is, not the trick, but that's where the risk is when you're using the second tier entitlement, how the system is noted in the VA. Because if you hit the wrong button, you could actually turn off those benefits and being able to use the second tier entitlement. So it's very important when we go and pull that certificate of eligibility, how we pull that from the system.
Got it. That's what that yellow highlighting is about. Okay. Next thing, and this is a core feature of the VA home loan program, but a lot of people don't know you can put 0% down and with no PMI, private mortgage insurance.
Yep. So 100% financing, you've earned it as a veteran. It's a benefit to you, and it is your right to get a home loan with 100% financing. Any money that's given in deposit, as long as we show the source of that deposit, a veteran can get back, right? Because when you're buying a house and you're dealing with sellers and realtors, and they say, "What do you mean it's a VA loan and you're not putting a deposit and no money down?" What's right away they think that's worse off. But actually, a VA loan is a very, very good loan, and as long as you're qualified correctly, the VA does a very good job, I think, of qualifying veterans. So you can give a deposit on the contract. So if you have to give $5,000 or $10,000, that would be applied towards the closing anyway. But if there's money that's left over, because let's say, for example, you buy a house for $300,000 and you had to give a deposit of 10%, so that's $30,000, and your closing costs are only 10, you can actually get that $20,000 back at closing. So as long as we can show where that $30,000 deposit on the contract came from. So it's a little bit of a misnomer, right? Because then everybody gets nervous, like, oh, it's 100% financing and they're not putting a deposit. But absolutely, the veteran can get that money back.
Right. So the loan to value is 100% on the actual mortgage, but there might still be some closing costs associated. And of course, the seller just might want some security that you're going to finish the transaction for the escrow deposit.
That's right.
Yeah. Okay. Another thing here, you can 100% loan to value cash out refi. Sounds fancy to me. With 6 months seasoning, but you want to back up there and talk about that?
Yeah, so you can, after 6 payments, and I believe it's no earlier than 210 days from the note rate, because you don't make that first month's payment, it works out to be, instead of 180 days, it's 210 days. So that's where that number is coming from, right? Because if you close this month in January, your first mortgage payment is not till March 1st. So the technical date is 210 days from the note date. You could go ahead and refinance for 100% again, if you have some equity built up, you might bought the house and did some work to the property, which by the way, we'll discuss, I guess, a little bit more. But there's now a VA renovation loan available for veterans. They can borrow up to $50,000 for repair. So after 6 months, you can look to take cash out, and you're also eligible for what's called an EARL, a VA interest rate reduction loan, and that's basically a streamlined refinance. There's no appraisal. We just kind of update things, make sure the payment history is good, and we can refinance you. That we also cover the closing costs for that EARL as a lender, and therefore it really is a true benefit that we're getting you down to a lower rate. No closing costs. You generally bring that month's payment to closing, but you're eligible to get a reduction in the payment after 6 months as well.
Great. So yeah, I had no idea. So backing up a little bit, you can get fixer-upper money. So you could acquire your first house, move in, fix it up, and then what we're talking about here is you can then take the equity that you've built up from fixing up the property and refinance after 210 days.
You got it.
Cool. Very cool. So that's kind of an extra bonus there. I did not know that you could get money for repairs bundled in. And James, maybe we're going a little too fast, but that would essentially mean if the purchase price of the property is 100,000, you could maybe finance 120,000, so you have a little extra for repairs.
As long as the after appraised value will support it, yes.
Okay, got it.
So
Yeah, it has to
it works like any other renovation loan where you have to make sure that the value based on that work will support it.
Got it. Yeah, it's got to be worth it. After you put the 20 grand in, it's got to be worth that much more or more.
Exactly. Yep. And then we can finance it all. Yep.
Great. So next one here, you can use income from a married and sometimes unmarried co-borrower to qualify. So it's not just based on the veteran, it's income.
Yes, and that's an exception that has to come from the VA. But let's say it's a veteran and their mom or dad or brother or sister, and they're buying a house together. Even if you can show, for example, fiance, something along that lines where there's, you're living together, there's a bond there. And so we can put that loan together, and as a lender, does have to get an exception from the VA, but we'll package it up and send it to the VA for an exception. Absolutely.
Great. And you don't necessarily need to use the credit of the co-borrower, or do you?
You do. It would always be based on everyone on the loan's credit and income, etc.
Gotcha. Okay. Good. So next slide here. Debt to income is secondary to residual income. You'll want to get properly qualified.
Yeah, so this is one thing I love what VA loans do, and I think it's really a great formula to apply to a lot of government loans. I think FHA, actually FHA does consider it a compensating factor on an FHA loan, and that's the residual income test. So in very simple terms, think about it this way. On a conventional mortgage, we qualify you based off of and an FHA loan, we qualify you off of your gross monthly income. A VA loan, we're qualifying you off of your net monthly income. And whatever the leftover is after paying all of your taxes on your pay stub and your debts and the mortgage payment of the proposed payment. And depending on the square footage, there's a utility calculation as well. Based on the region that you're in and based on the number of people in your household, there is a standard that's set for residual income. And as a veteran or on a VA loan, if your residual income is 120% above that number, so if the residual income test for a single family Northeast, I'm just using a number, forgive me, I don't know it off the top of my head, but $750. If you're at $850, then you would, or in that case, $900, you would automatically receive what's called a debt to income waiver. Okay, so your debt to income could be 65, 70%. We've gotten veterans approved at because it's logical, right? And you say, wow, that's super high debt to income. That's like subprime, but it really isn't, because if you applied that to any other loan, the fanciest jumbo guy out there with, making $500,000 a year buying the $1 million house, we're qualifying him on the gross income. If you actually took a residual test, his DTI would also be 65. So, because the point of it is, here's my gross income. These are my deductions from my pay stub. These are my liabilities. This is the proposed payment. So we're subtracting all of that, including, your Social Security taxes, your state taxes, because your take home, your net pay. And then whatever's left over, if you have enough to carry all of the expenses and a little bit more, the DTI really doesn't matter. And that makes a lot of sense to me. And like I said, I think that test really should be applied to a lot of first-time homebuyers. And that's why VA loan default rates are so low, because it really is a true qualification based on what you take home and what your bills are.
Okay, great. So I understood about 75% of that, and I've been around real estate a while, but just if I'm going to take that down to layman's terms, I'm going to say work with somebody like James who really understands the rules around DTI, debt to income, and all that, because you might get qualified for more with somebody like James versus somebody who's not as well versed. Is that fair?
Yeah, absolutely. And the vice versa for that. If you're not being qualified based on the residual, you might not qualify for the loan that somebody is telling you that you qualify for. That test is critical in your qualification for a VA home loan.
Gotcha.
So you can make a bunch of money and then you're using your gross income and you're not taking those deductions. And because you have a lot of expenses and the payment is, higher, you may look at it and say, oh, well, your debt to income is only 50%, and that might qualify you, let's say, for an FHA loan, or 48%. But once you do the calculation, you may not have the residual left over because of the other expenses. So it's very important to use that.
Got it. Great. Now, next one, if you're disabled, you're exempt from paying a funding fee. And we have some specific numbers on there. Do you want to talk a little bit more about that exemption?
Yep, this comes from the certificate of eligibility. If you are a disabled vet, you do not pay a funding fee. Many veterans also don't pay local taxes because of their disability, and we would not. We would work with you. We've done this for all of our veteran clients that are exempt. We work with you and the attorney or the title company, depending on which state you're in, if you're not using an attorney, to get a letter from the municipality saying, yes, based on their review of your disability, you will not pay taxes. So we don't have to use taxes to qualify you in that residual income test. We can remove them. So happy to work with any veterans to figure that all out.
Great. So that was our last slide, James. Thank you. I think, anybody watching this who's a veteran thinking about using the VA home loan program at this point probably realizes that you, sir, are an expert on this topic, and that your company is committed to working with veterans. You're doing what you can in terms of helping them with credit store closing costs. You're making those donations to Backpacks for Life, wonderful organization. And if somebody is watching this and they want to work with you, I guess we'll put a link near this video, or they can text you. Is that your cell number, James?
Yeah, that's my personal cell, and it means a lot to us to work with the veteran community. We owe it all to you guys. I'm a product of the American dream, so anything and everything that I can do for anyone as related, that's my personal cell phone. Feel free to use it and call me anytime. Feel free to text me anytime. If you have, I always say there's no such thing as a stupid question. Just, feel free and use me as a resource. And, we're licensed in 16 states. So there's, 34 and change of them that we're not licensed in. And if you need any advice, I'm happy to give it to you as a friend, kind of off the record, so to speak, because I'm not licensed. If I'm not licensed in that state, I can't help you, get the VA home loan, but I can absolutely be glad to give you some advice.
Right. And if this video is showing, we're probably working in your state. James, I'll also put a link to the application directly. If anybody wants to get started right now, they can just answer a few questions near this video. And so probably you or one of the other two guys who are really well versed in VA will get back right.
Yeah, I did want to hit on that. We have some really, really good experts on the team in VA loans. It's not just myself. So you may hear, from somebody on my team if you are requesting information. My goal is to get you someone to speak to right away. I'll always do my best to, like I said, respond to a text message or a call. But if I know that I'm, not doing you the right service, I'm going to ask somebody on my team, to reach out to you. But they are also experts in the VA home loan.
Great. Well, thanks a lot, James. Stay tuned, everybody, for more content like this related to the VA loan, and you can use James's number or the application on his page to get started soon. Have a great weekend, James.
You too, Ryan. Thank you.